And now let's recall the dead cat. The first condition of this pattern is an impulse. I wonder how strong this bounce is according to Fibonacci. There is a strong impulse on the chart with a noticeable pullback. Hey my dear friend, it's your personal trader Mary. Today let's talk about the dead cat bounce pattern. The graphical formation of the dead cat bounce occurs when a stock opens with a downward gap of 5% or more. A significant price drop in the pre-market is a necessary condition for the formation. If the stock is not very volatile, a 5% gap on the trading terminal filters already deserves attention. However, if the stock is highly volatile, the gap should be larger. For at least the first 5 minutes after the market opens, the price should continue to decline. If the decline lasts longer, that's even better. But the continuation of the price decrease after the market opens is a mandatory condition. If this doesn't happen, we cannot speak of the formation of the dead cat bounce trading pattern. Sharp price drops usually occur as a result of some fundamental news that come out during the break between trading sessions. For example, it could be a company's quarterly report. The approach to trading this formation is that once the price starts bouncing back up after the drop, the trader should be ready to open a short trade. Despite the bounce, the cat remains dead. The short-lived rebound doesn't mean that the price is ready to go up. The news has dealt a serious blow to the stock and investors are frightened. The bounce gives them a second chance to unfloat their positions, which pushes the price even lower. By joining such situation, a day trader can make a profit, opening a short position. A short position should be sought when the stock, after a significant morning gap and decline during the first few minutes of trading, starts bouncing back towards the opening price. With a high probability, the opening price levels will serve a resistance zone. The price may not reach this level by a few percentage points or test it. In any case, when stock returns to the opening level, an opportunity for entry should be sought. A short position can only be opened when the price starts falling again. Such behavior of the stock will confirm that it is indeed the dead cat bounce pattern. Stop level and target. After a brief bounce, the price in this formation ultimately returns to the level from which it bounced. Therefore, it can be expected that after bouncing off the opening price of the day, the price will retest the morning low range. Thus, the initial target for a short position is slightly above the daily low. However, it is better to close only a portion of the position at this level. If the price starts to rise again, the remaining portion can be closed. If it breaks the daily low, then the position should be held until the first signs of another upward bounce appear. In such situation, a short trailing stop order works well. When opening a short position, the initial stop order is placed a few cents above the last local maximum, after which a downward reversal and entry into the trade occurred. The stop level should be beyond the reach of regular price fluctuations, but the risk should be kept relatively short, with the profit potential outweighing it by at least a factor or two. Let's see how the cat performs in a real example. We choose the USD and CAD pair, enter a 300 short trade for 3 minutes. And now let's recall the dead cat. The first condition of this pattern is an impulse. We have an impulse. After the impulse, there's usually a small pullback. That's the essence of the dead cat pattern. After the impulse, the price retraces slightly, then returns to the end point of the impulse, breaks that level, and continues downward. There is a strong impulse on the chart with a noticeable pullback. After the pullback, the price returned to the end of the impulse. This has already happened and the price has dropped before the end of the strong impulse. Once the price breaks this level, it goes down. That's why I confidently open the short trade and expect the price to follow the same path as the previous impulse. This is approximately how much the price should drop. Now we just have to wait for a minute and a half. I'm not concerned about the current price increase because it has already broken the support zone and there is a high probability that it will continue to fall. But just in case, you can open another trade for $600. Right now is a good entry point. I will open the second trade for only 2 minutes because I expect a very strong movement downward at the moment. Downward. Well, why does the internet want to lag right now? Oh, finally. Opening a $600 trade. The duration is only 2 minutes. That will be enough for the price to repeat the previous impulse. I wonder how strong this bounce is according to Fibonacci. So, according to the Fibonacci levels, it's clear that the price bounced exactly from the 50% level. Everything is falling into place nicely. Not perfect, but I made a profit of $228. I think the dead cat pattern has just started to play out, and soon the price will actually drop to the level I marked. If I had entered for 5 minutes, it would have been even better. Overall, if you're trading on a 1-minute time frame, it's advisable to open trades for 3 to 5 candles, which is 3 to 5 minutes. But it's better to go for 5 minutes to be cautious and mitigate any possible pullbacks, and to ensure a strong impulse actually occurs. Or you can trade like me. Enter for 3 minutes and, in case of a pullback within the pattern, open a hedge trade for another 3 minutes. In that case, the small trade will close at a loss, but the larger trade will be profitable and you will ultimately make a profit. The dead cat pattern works great because it never argues with the market. If the price is falling and barely bounces, it will definitely fall further. In the graphical formation of the dead cat pattern, the key level is the opening price, and the opening itself occurs with a downward gap relative to the previous day's close. In many cases, the stock retests this level on the same day, providing day traders with an excellent opportunity for successful short trading. I have a Telegram channel where I share the most accurate signals, so you won't have to think about it. I do it all for you. Subscribe to my YouTube channel, join my Telegram, become part of my community. My name is Mary, and I'm the best trader.